Hi, my name is Justin Brown. I'm the Director of Investments here at Greenspring Advisors and lead Greenspring's Investment Committee. Today, I'll be discussing some highlights from the second quarter of 2024. Let's start with asset class returns. Emerging market stocks led the way, followed by U.S. stocks, which continued their impressive performance from the start of the year. Global real estate and international developed stocks experienced a slight dip. In the bond market, both U.S. and global bonds outside the U.S. were slightly positive. Increased yields for these asset classes helped offset a slight rise in interest rates that we saw throughout the quarter, as markets began to realize that the Fed would hold off on their interest rate cuts until the latter half of the year. Looking at longer-term returns, we see positive performance across most asset classes over the 1, 5, and 10-year periods. I mentioned this last quarter, but I want to again point out the 5-year return for U.S. stocks. Despite the challenging market environment we experienced due to the COVID sell-off in 2020 and downturn in 2022, U.S. stocks were still up over 14% on an annualized basis. To put this in perspective, if you had invested $100,000 in the U.S. 5 years ago, you would now have $194,000. The market's ability to weather these periods of volatility highlight the importance of remaining invested and sticking the course during difficult times. Shifting gears a bit, with the election right around the corner, we wanted to look at how markets have historically performed across different presidencies. This chart right here displays the S&P 500's monthly returns going back to 1926. The red dash marks represent the monthly returns during months when a Republican won the election, and the blue dash marks represent the monthly returns when a Democrat won the election. The first thing I want to call out when looking at this is while there are a lot of monthly returns, 63% of the time the index had positive performance, averaging almost a 1% return per month. This illustrates the market premium investors can capture by investing in stocks. As it relates to the election, you can see that there is no clear pattern in returns based on whether a Democrat or Republican was elected. This is because market expectations around election outcomes are already embedded in security prices. In other words, there's no indication based on the historical data that the market will react one way or the other to either party winning the election. This next chart illustrates how an investment of $1 would have grown over the years across different presidencies and political parties that have held office. Continuing with the same color scheme from the previous slide, red highlights indicate a Republican presidency, and blue highlights indicate a Democratic presidency. While this is a hypothetical example, it demonstrates that markets have rewarded long-term investors under a variety of different U.S. presidents. Again, we see no identifiable pattern between which political party wins and how that will impact the stock market over the coming 4 years. While this is no guarantee of what the next 4 years will bring, it hopefully helps to re-emphasize the importance of staying invested regardless of the outcome of the election. On behalf of the Investment Committee here at Greenspring Advisors, I want to thank you for your time today. As always, please feel free to reach out to us with any questions.